So as I said, my name's Jude and I manage the Student Welfare Advice team, and today's talk is on student finance, and we're looking at next academic year, so September 21-22. The figures only vary very slightly each year, so if you were thinking about joining in January, they would just be slightly less. Okay, so looking at an overview of funding, we're talking about home UK students, looking at some of the targeted support, how to apply, very important, paying back the loans, some case studies, so really looking at how that works in practice, part-time students, and some additional information. So if you are an EU student or you've studied anywhere else in the world at degree level, or you have immigration restrictions on your stay in the UK, then we will not be covering the funding for those students. It's for home UK students. So we call this the main package. So there are three elements to this: the tuition fees and then the tuition fee loan, maintenance loan, which is for your living costs, and additional support. So there are some extra allowances too. So we're going to look at each of these in more detail. So starting with the tuition fee loan, and just to be clear, loans are repayable. So, and we'll, as I say, we'll talk about the repayment later on. So the tuition fee charge per academic year is £9,250, and you can apply for a loan for up to the full amount. The loan's paid directly to the university, so you'll never see that. It's not income assessed, so you could be a millionaire and still apply for it, or like most of us, not a millionaire and need to apply for it. And there's no age limit, so there's no age restrictions on applying for the tuition fee loan. The maintenance loan, as I said, this is used to pay your living costs, so to pay your rent, your course materials, day-to-day living expenses, etc. Now, obviously, this is paid to you, and it's paid directly into your student bank account. And it's paid in 3 instalments. So at the start of the academic year, January, and then usually March, April time, depending on where Easter falls. The loan is written off after 30 years, and there are 3 different types of maintenance loan, just to make it a little bit confusing. So those who are eligible for welfare benefits, although not many students are, there's one level of loan. For those who are not eligible for benefits, there's a standard rate of loan. And for students aged over 60, there is a different rate of loan. So what does this mean? What will you actually have in your pocket to spend? So for living in London, the annual rate is £12,382. Now, some of this is income assessed. So what that means is they will look at your household income. So non-income assessed means it doesn't matter how much your household income is, you will guarantee that amount of money. So that's £6,166. And then the income assessed amount, it's based on normally parental income or that of a civil partner or spouse, and it will be dependent on their income as to how much of that portion of money you would get. Now, if you live with your parents whilst you're studying, there's a lower rate of loan, and that's because they expect that your parents might not charge you rent or help you out with some of the, like not having to pay food or bills, for example. Now, that's not always the case, so just be mindful of that it is a lower amount. And again, that non-income assessed amount is much lower, £3,516, and then the income assessed allowance on top of that. So just to give you an idea of household income, so if your household income is 25,000 or below, you'll get the maximum amount of maintenance loan. And then as it goes up to 30, 40, 50,000, all the way to £70,004, you will get the minimum amount of maintenance loan. So just for the other groups who are in receipt of benefits, you'll see there that your amount of loan is slightly higher. And the same also for the living with parents rates, that's slightly higher too. And again, to give you an idea of household income, that is 25,000 is the standard. Anything up to that amount, you'll get the maximum amount of loan. But this time it's £70,011 before you hit the minimum amount. So anything above that just remains at that minimum amount. So you'll always get that 6,166. And then for students who are 60 or over, again, so the maximum is the £4,014. And then there's the different amounts there up to 43,750 where you get £50. So now the means testing is based on the previous tax year. So in the UK, that's April to April. So April 2019 to 20. And it's based on the gross taxable income of resident parents, partners, including same-sex partners, but also step-parents. It's the gross taxable income of a student, excluding any earnings during holidays or term times. So they're not interested in part-time work. What they're really looking at is unearned income. So if you own property, stocks, shares, that kind of thing. And then there's deductions from that income based on whether there are other dependent children in the house or payments into pension funds. So the only way to qualify where it's just solely looking at your income is if you qualify as an independent student. And there are quite prescribed categories of what an independent student is. So if you yourself as the student has care of a dependent child or children under the age of 18, that will automatically make you independent. If you're married yourself or in a civil partnership before the start of the academic year, again, that qualifies. If you have no living parents or your parents cannot be traced, or what's called irreconcilably estranged from your parents. So through choice or sometimes not, you have no contact with your parents. Or if you've supported yourself for 3 years before the start of the first academic year via either making a claim for benefits or working. Now, what's key with that point there is that the 3 years don't have to be consecutive years. It just has to be 36 months prior to the start of the course. So to summarise the main package, you have tuition fees of £9,250. The maintenance loans, so students that don't have a benefit entitlement, their maximum is £12,382. Benefits, it's £13,504, and over 60, £4,014 per year, and it increases slightly each year. However, the tuition fees won't. So I mentioned additional support. So if you have an adult dependent in your household, you can claim, and this is a grant, so this is not repayable, of £3,190. Parent learning allowance of £1,821. And if you, the student, has children and you need to use registered childcare, you can claim 85% of the childcare costs up to £179.62 per week if you've got one child, and then if you've got 2 or more, it's up to £307.95. There are also disabled student allowances, but that's not money that you'll get in your pocket. It's support that's provided through student finance for specialist equipment, perhaps a support worker. So different allowances. There's a little bit of travel in there, depending on your individual needs. So for any NHS students, I'm sure you heard Boris's announcement around lockdown time, wasn't it? Gosh. So there's a new bursary. So this is the first year currently that it's run, and there are these additional allowances that you can apply for. The regional incentive, there still hasn't been an announcement about that yet. Very sure. But there's a new training grant, a specialist subject payment. You can also claim support as a parent. When you're on placement, you can claim back your travel if your expenses are more than traveling to campus. And there is what's called an exceptional support fund. So they're all grants that you don't have to pay back. And that's for the nursing, mental health and midwifery students. Again, looking at extra support. So the university does have a number of scholarships, and they are available on the university's website. So on the external website, mdx.ac.uk. So have a look there. They cover some are per subject area, some are about academic achievement, some are community work, all different ones. So have a look. Obviously, they'll look closed at the moment because they haven't reopened for next year yet. So key thing, how to apply. So usually from February, March time, depending on when the legislation is laid in Parliament, you can make your application and you apply online to student finance. You don't need to have accepted a place. You don't even need to have decided what course you want to do. You just need to make an application and go with the one that you think that's most likely. So you have to register with Student Finance and you have to set up various security details. And you then get assigned a customer reference number, and you'll need that every time you log in and every time you speak to Student Finance. When you're doing your online application, you'll also need to have your national insurance number to hand, either your birth certificate or passport number, the household income details, although that can be added later, and key, you need your bank details so that you get paid. There is a calculator on Student Finance's website that you can see what you might be entitled to based on household income. And once you've been assessed, then you receive a Student Finance entitlement letter. And that will be online on your account. Now, if you do a paper form, you will need to make sure that you sign the declaration, because if you don't, you won't get your money and the university won't get their fees. So for parents, they also need to register for an account because they need to submit their household details. And they also need their national insurance number because SFE confirm with HMRC that the income they've said they had in that particular year is what HMRC have recorded. You won't need to send any further evidence unless there is a discrepancy. And yeah, just for parents there to check that the electronic declaration's been completed. So repayments. So these are the current repayment arrangements. Now, bear in mind, these may change by the time you graduate, but it will only be the figures. It won't be the principle of how it works. So it's collected through HMRC, through the tax system. And they only start taking payments once you're earning over 25,725. Now that, as I said, is possible that that will be a higher amount by the time you graduate. So they take 9% of anything above that 25,000. 9% is not, though it's a percentage, it's not the interest rate on the loan. So it's the amount, the portion that they take of your income above that amount. So the interest rate currently is RPI plus 3% up to, so while you're studying and up to the April after leaving. And then from the April after you've graduated, if you earn below 25,000, the interest rate is applied at the rates of inflation. And then after that, it's RPI plus up to 3% on a gradual scale. So the maximum would be RPI plus 3%. So what does this really mean? So if you're earning 25,725, then you won't be paying anything a month. If you're earning 27,000, it's 9% of the difference. So it's 1,275, meaning that you'll be paying £9.56 a month. And remember, it comes out of your wages in the same way that you pay tax and national insurance, so you won't ever see that money. Again, if you're earning 29,500, then it's 9% of 3,775, which is £28.31. And then just two more so that you get the idea. 30,000 would mean that you're paying £32 a month, and whereas 33,000 would mean you're paying £54.56 a month. So part-time funding is virtually the same as full-time. So you can, your tuition fees are then pro rata of how many modules you're doing. So what intensity is what student finance call it. So if you're doing 2 modules, that's generally 60 credits, then your fees will be 50% of 9,250. So the maximum you can do is 75%. You can apply for the tuition fee loan to cover the fees, and there is a pro rata maintenance loan available. So if you're studying 75% intensity, you would then get 75% of the maintenance loan. The repayment starts in April, 4 years after the start of your course. So you're still going to be studying at that time. So it will depend how much you're earning. And it's the same repayment process as full-time students. And you can also apply to the Student Support Fund and for DSA support. So just some extra things that we thought would be useful. Home status. So that's what qualifies you for the funding. So if you've got individual questions about that, you might want to join me in the UniBuddy platform later. Student bank accounts offer you an interest-free overdraft, but obviously you do still need to pay that back. Council tax, students are exempt from council tax, but there are some stricter rules about that. So we'll look at those in a second. And just a note there about housing contracts. Do check the break clause, because some are for a whole year and not 6 months. So do have a look at that. So student bank accounts, key thing there, shop around. As with any financial product, you should always look at what's available to you. Again, be careful what freebies they offer. Some might not be appropriate, or you might be better off with a different bank. You don't need to stay with your current bank either. Those links there, so Money Saving Expert does a comparison of the different accounts. Bit on council tax there. So if you're living in halls of residence, you're automatically exempt. If you're all students in a private rented house, you're all exempt. If you live with one other adult who's not a full-time student, then there's a 25% discount applied. But if you live with more than one adult who is a non-student, then the discount is lost. Key thing there is just to remember that you may get a discount from council tax. Student discounts, rail cards, student Oyster cards, the Totem card is the card from NUS that often gives you a lot of discount. All of these things are worth looking into. Now, depending on where you're domiciled, so if you're living in Scotland, you need to apply to what is known as SAS. If you're living in Northern Ireland, you apply to the Education Support, or if you're living in Wales, you apply to Student Finance Wales. Obviously, if you're living in England, you apply to Student Finance England. So there is more information on all of those websites. And I think that's bang on my 20 minutes of have you got any questions? So I'm going to stop sharing. Shall I stop sharing my screen?
Hey Jude, keep the screen up if you like, just for consistency. We've had one question come in that say, is it recommended to avoid getting a maintenance loan if possible, or should you still apply regardless?
It depends on your financial circumstances, because if you can afford to pay your rent and your daily living cost without having the maintenance loan, then there seems no reason to take out the loan. The interest rate on the student loan is generally one of the lowest interest rates. So banks, for example, and I'm being very vague here, most bank loans, the interest rate is 19%, often higher too. So it depends, and you don't have to take the full amount either, but just bear in mind that it is paid in 3 installments. So say you didn't want the full 12,000, but you wanted 9,000, it would then come as 3,000 in each of those 3 installments.
And Kame would like to know, how about EU students? Can they apply for the loan or any type of funding?
So for EU students, come September 21, or are we thinking maybe January? I don't know if you can come back to me.
He didn't specify, but it could be, in general, he means.
Okay, so in general, so as you know, well, if it's not with the presidential election in America, we've got Brexit in the UK and COVID. So because we have left the EU, well, we have, at the moment, you would have, if you were coming in September, you would have to apply through the immigration rules for what's called the student route visa. And we haven't seen what the tuition fees are going to be for the EU students. Now, if you're already in the UK, that's a completely different story. It will then depend on whether you've already applied for EU settlement or pre-settlement. And we are hoping, although it's not been confirmed, that that group of EU students will still pay the same as home students. Does that help?
Perfect. And someone would like to know, with the maximum loan, is that enough to cover you without needing to work, or is it a good idea to get a job whilst at university?
Most students work part-time as well as studying. The loans have increased quite a lot over the years, but so has the cost of living. So most students work part-time as well.
Perfect. And we haven't had any more questions in at the moment. If anyone did have any more questions, please put them on the Q&A. If not, Jude, I think you'll be on the UniBuddy after this as well.
Yes, that's right.
Perfect. So if anyone does have any questions that they think of after the talk, you can head over to UniBuddy where Jude will be able to answer those for you.
Yeah, no problem.
We'll just give it another minute if that's right, Jude, see if any more questions come in.
Of course. Perhaps one thing, just to go back to the EU students, if you are thinking about a January start, then the advice is that you need to be in the UK before the 31st of December, and then apply for pre-settled status, because the rules haven't changed for January starts. But essentially, come September, if you aren't already here and have one of the settlement scheme status, whether that's pre-settled or settled, essentially you're being treated like an international student, and you will have to provide funds in your bank account to show that you can afford to be here, etc. So it might be worth looking at whether there's something in January if you were planning to come and study.